Welcome back. Not much there in the pre-opening today. The SGX is flat. Asian markets around us are also flattish, so we could just limp to a 5500 plus kind of an opening. But how will the week close up, and how is the stage being set after the relentless decline of the last few days? Ambareesh Baliga and Amit Trivedi have joined in a bit. Mehrabun Irani will as well. Gentlemen, morning. Ambareesh, do you think that 5500 support is breaking down?
As of now, it may not really break down. We could take some support at these levels. Again, there are expectations that finally RBI could have a handle on the rupee and may not really decline too much from here. So based on those hopes, possibly we'll have some support at these levels. We could see some amount of bounce back, but I really doubt whether that can sustain.
Amit Trivedi also joins in. Amit, hi, morning. What about you? What's your call on the Nifty now?
Hi, good morning. So actually there are two scenarios that we are looking at. The first one is that because of the currency volatility that we are experiencing, FIIs kind of go slow on India. If that happens, then we are predominantly linked to domestic factors and which are neutral to negative. Hence, we may be quite volatile and the range can go slightly lower from here on. The second scenario is that since we have, if you look at the last YTD data, we have outperformed the EM index by around 5%. And if that continues, we think the range which was till now around 5500 to 6000, 5900 kind of levels, that should hold on. So that we'll come to know only in a few days from now on. But what we are experiencing, the high volatility, it should continue for the next few days or in the next week, but it should subside in at least the second half of August.
Ambareesh, how would you react to Tata Motors numbers, and what is your call on the stock now?
Basically weaker than expected, so a bit of a disappointment there. And again, their dependence on China, I think that's what is worrying me, because even going ahead, clearly I think there will be a slowdown in offtake there, and I think that will create pressure going ahead. So even at these levels, I would say it's possibly time to book out to a certain extent.
Amit, how are you approaching the banking space? Any strategies there?
Yeah, in fact, what we are experiencing is there were simple trades that people or traders were executing, which is long pharma, long IT, short banks. We think those trades are becoming more crowded now, and the risk reward is not in favor of going short in banks at this point of time. So going and trading in options also could be slightly risky at this point of time. So one can look at some kind of pairs, for example. So for example, if you look at IndusInd versus ICICI, one can enter into that ratio trade, which is buy IndusInd, sell ICICI. The ratio is at around 2.31 right now, ICICI by IndusInd. This can go down to around 2.2 for a target per se. You can place the stop loss at 2.36 in this particular strategy.
Ambareesh, yesterday we saw the first signs of some of these pharma companies coming off. I mean, Lupin was down 7% post its earnings. Sun Pharma lost quite a bit as well. How would you approach these names?
I think we could see some more correction, because that's one of the few spaces, pharma and IT are one of the few spaces where people are still making money, whereas the rest of the portfolio is bleeding from the other sectors. So it's quite natural that people will book out to a certain extent wherever they're making profits, and especially when the valuations seem a bit stretched given the economic scenario. So I think that correction will continue a while longer.
Okay. Amit, you have a call on Bharti for the day. Just tell us about that.
Yeah, so if we look at Bharti, for example, the stock is predominantly in a range of around 310 on the lower side and 340 on the higher side for the last few days. We think the stock should consolidate and probably marginally move up from here on. So one can enter into a ladder strategy in Bharti, which is buy 330 calls, sell one call of 340 and one call of 350. There is a cash inflow of around half a rupees in this strategy, which is 500 rupees on a lot. And if Bharti indeed goes up, you will make money. Your maximum profit will be around 10 rupees if Bharti goes anywhere between 340 and 350. Losses will start above 360 in this particular strategy, which we think is quite improbable.
Okay guys, just stay on. We'll get some more voices in when we come back from the break. Just 15 more minutes and we'll get the pre-opening rates in. Hi, welcome back to the show. Just counting down to pre-opening. Some notes coming in from CLSA on Sun Pharma. Remember, Taro announced their numbers just a while back, and the numbers were actually lower on a year-on-year basis, both on the top line as well as on the bottom line. Net sales down 4%, net profits lower as well. And CLSA says that Taro's numbers were below estimates, but they maintain a buy with a target price of 630 on the stock. It was one of the big losers yesterday. Mehrabun Irani of Nirmal Bang Securities is also with us. Hi, Mehrabun. Good morning. Well, it's been a very poor result season so far, but if you had to recommend any stocks that you would advise buying now on the back of a good set of numbers, is there anything that you can find?
Well, about the front line is something which interests us just because we are looking at the company going ahead as Tata Motors, and I think there will be mixed opinions coming from people post the numbers because domestic performance is something which I've been going on stating is not something which you should be looking at. The company is going to take measures, one can remain assured on that as far as the domestic performance goes, because that is going to remain muted, is going to affect the consolidated numbers also. But if you look at JLR, and look at the slew of models, the new markets which the company is going to enter, the July numbers, whatever one can see in various markets, which is downloaded on the news agencies as of now, shows that things at JLR are continuing to remain robust. And with the new models going to be launched, new markets the company is going to enter, just because of JLR, I think one can remain positive on Tata Motors on a consolidated basis. So I think we like Tata Motors. In the mid caps, we like names like Allowable Lingerie, which we found the results to be very good. I think Motherson Sumi, a company which is more or less an international company. I think it's the best bet in the auto ancillary segment. That looks good. Bayer Crop Science looks good. And I think what we are taking into weightage right now is the fact that we are not looking at companies which are heavily over leveraged or don't have a decent cash flow. So we are looking at companies of that type, because right now in this market and the sentiment in which we are, the investment cycle not kicking off, I think mid caps has become a dirty name. So recommending mid caps should require a lot of courage. So we are looking at simple parameters right now and identify these three companies besides Tata Motors among the frontline names.
Morning, Mehrabun. Some of the real blue chip names like ITC and HDFC have corrected a lot. Between around 15-16% over the last 10 days. Would you buy any of these two names, or do you think they will correct more?
I think I would definitely look at FMCG on correction, but ITC and HUL are the two heroes which had become a little bit heavily over-owned. I think so. Some more correction definitely possible in ITC. I think HDFC certainly is a stock worth possibly looking at. In fact, I'm honest to admit that even if you would ask me this question, maybe at 50 rupees higher than the present price, I would have said go ahead and buy HDFC. I think what has happened as far as the RBI measures goes is taking its toll on all companies which are in financial services, irrespective whether it's housing finance or NBFCs or the private banks. Everything is taking its toll. So sentiment wise it's got affected, and yesterday what happened as far as the Morgan Stanley weightage goes, that also took its toll on the sentiment towards HDFC and HDFC Bank. This correction to be used as an opportunity, certainly yes, from the longer term. On the shorter term, I'm still not ruling out for the 2-3-4% fall.
Ambareesh, if there is another leg of a downside in this market from these three spaces that have been holding up, IT, pharma and FMCG, if you had to be cautious on one space, which one would it be?
FMCG would be one space where I would be cautious because I've been saying that the valuations are stretched, and especially when you have the discretionary spends coming down, I think that's going to hit the FMCG space the most. So a stock like HUL or ITC at these levels, I'll be quite cautious, no doubt.
Do you track Apollo Tyres, Mehrabun? The numbers came out yesterday. They looked good, but the stock was still down about 4%.
Yeah, track Apollo Tyres as well as MRF. In fact, Apollo Tyres is a stock which we liked at around 80-85 levels. It's come down to 60 mainly because of the market has taken the acquisition of Cooper Tyre very negatively. I remember when Santo was going in for Taro, or when Tata Steel went in for an acquisition of Chorus, or Tata Motors went in for JLR. I think the market takes all sorts of big acquisitions in a negative because anything which is going to strain the balance sheet, the market is not liking it. At 60-62, an opportunity for the longer term, certainly yes. As far as numbers goes, the market should have been enthused by the numbers. That is a big question. Why the market reacted negatively post numbers is mainly because the market is still having an overhang as far as the Cooper Tyre acquisition goes. As far as the margins of the European operations goes, they were muted, something that the market never liked. And the impact on the bottom line was mainly because of the foreign rubber prices. Rubber prices in July, domestic rubber prices have gone up. In the international market, the rubber prices are lower, but because of the rupee depreciation, the benefit because of the difference in the imported versus the domestic price is not going to be as big as what it was maybe a couple of months ago. Now that is what the market is not too much enthused about. So on the whole, the numbers look interesting, but I don't think too much is going to happen to the stock in the short run because the overhang of Cooper Tire acquisition is going to remain for some time to come.
Amit, how are you approaching the oil and gas space now? Big names like Reliance and ONGC?
Yeah, so in fact, Udin, that's one space that is still kind of protected, especially the private sector ones like Reliance, as we were talking about. So we think the stock at around 860 should consolidate at these levels. So, and the downside seems to be protected around maximum 830 kind of levels. So one can go and sell puts of Reliance for the August series. You are getting around 5 rupees. The implied vols at around 31% should come down to around 26%. So that should help in this selling strategy. So one will make strategy in the profit in the strategy if the stock remains any value above 800, which is close to around 8% from current prices.
Let's take a break, come back with the pre-opening in just a couple of minutes.
MCX Stock Exchange, India's new stock exchange, presents.
Hi, welcome back. Just 2 more minutes and we'll get some pre-opening rates on the screen. Lots of result reactions as well this morning. So lots of nifty stocks will be in focus. Ambareesh, what is your call on ONGC right now after the news on the subsidy?
ONGC, I think it is still, time to stay out. I think the only stock in that space where I think one should be looking at buying and where we are bullish is Reliance Industries. Despite that penalty news, we feel that it will be quite difficult for it, them to implement that. So in case we see a correction, I suppose one should be getting into Reliance.
Merabun, are you expecting a deeper cut in the frontline IT names like TCS and HCL Tech, which corrected yesterday because of the sheer magnitude of the run that they've had?
Yeah, it's strictly possible then. I think the unfortunate part in this market is just the opportunities are just not cropping up elsewhere. It's only IT. I think pharma, if one looks at the growth in the top line, I think one needs to be a little bit cautious on that particular front. FMCG overdone, correction due. So will IT react further is honestly a very difficult call, but yes, in absolute valuation terms, quite expensive. Relative valuation, I would use the word rich. So one should be buying into it at the present level. Well, if you want to protect your money, ultimately it will remain protected. But over a period of time, over the next 2, 3, 4 quarters, if and when the investment cycle turns, I think these are the type of stocks which you need to exit and possibly go into cyclicals. The problem is the time for cyclicals has still not come. So IT may possibly remain at the present levels or move in a narrow range from here onwards.
Okay, 40 seconds more to go. Amit, you have a pair strategy today in the banking space. Can you just quickly take us through that?
Yeah, so as I was discussing, IndusInd Bank could be bought because this fall has quite sharp compared to what ICICI has witnessed. So one can buy IndusInd and sell ICICI Bank for the next few days. So we think the outperformance in IndusInd would be higher than in ICICI Bank. So that's those kind of strategies we feel one can do at this point of time, given the way markets, because they have become very choppy and just one directional trades could be quite risky in nature.
Okay, here comes the pre-opening today. Let's see whether we can strike out a little bit of an up move. 40 points up on the Sensex, 5 points up on the Nifty, now 45 down on the Nifty. So settling down slowly. I don't think we'll open with that bigger gap down. But how much of a gap up or how much of a move up still remains to be seen. The Sensex is moving along nicely with a 70-80 point gain. The Nifty is pegged back because of some really odd rates which are coming in now on names like TCS and Lupin, both down 10%. Clearly that will not be the case and the Nifty should recover in the next few seconds. Ranbaxy is down as well, big loss on that name. So there could be some reaction. HDFC Bank is in the red. That has continued to slip. And you've got stocks like NTPC a bit weak today. Reliance is not particularly strong in the pre-opening, and ICICI Bank and Infosys are both a bit soft. HUL2 is not looking great below 600. So too many of these heavyweights, Reliance, Infi, HUL, TCS are dragging, and that's why the index has still not found its feet. But as some of these rates normalize, as is the case with stocks like TCS and HCL Tech, they're coming off the lows of the morning. The Nifty is also cutting its losses. But let's turn to the all-important rupee first. Sonia?
61.20 is where the rupee has opened, so still languishing at those low levels below 61. Remember yesterday the intraday low was 61.45, so today there's just a bit of a respite, if you want to call it that, but just at that 61 level itself. In terms of gainers, so then Tata Motors is reacting quite well. Yesterday the stock was all over the place while it was trying to adjust to what the numbers were, but now it's reacting to a lot of these brokerage upgrades coming in post the numbers on the JLR good performance. So Tata Motors there. NMDC had a very good showing yesterday post its numbers, so that continues on the upside. Now it's sort of tapered off a little bit. BHEL is up about 2.5%. HDFC and HDFC Bank, that was spoken about a lot yesterday post that Morgan Stanley report, seems to recover a tad bit, so up about 1%. And some of these other banking names like Axis and ICICI Bank are also seeing a marginal recovery, nothing to boast about. But now the Nifty is adjusting to a 0.7% cut, so there are more losers than winners, as we have pointed out. The winning list is very slim. It seems like it may be a slip below that 5,500 level again, and today is the weekly closing as well. How important and how nervous would traders be if we do get a closing below 5,500 this week?
Well, I think now it's not a question of people becoming nervous. It's actually people looking at it, or traders if you're talking about, they'll probably be happy, because I guess most traders are short in this market and not long. So investors who are holding portfolios might get that sagging feeling if the market begins to close below 5,500. But I don't think it's that material either, Sonia, now, because the market in my eyes has broken down already. This is an optical level that we are clutching on to, so I don't think 5,500 has great relevance. We have traded below that over the last yesterday. So, 20-30 points this way or that does not make or break a market. We ascribe great importance to these levels, but the way things have been moving over the last few days, we were talking this morning just now about the possibility of FMCG correcting. FMCG has already corrected a lot. Lever's down 16% from its recent high. I think ITC is down some 14%. Now, these are very significant falls in large cap FMCG names. They don't fall like this. So I think a large part of the market which was holding out has already started cracking lower, and therefore I wouldn't ascribe too much importance to this 5,500 number just because it's a round nice number. I think the market has started to break down already. Now, to your question on whether it will manage to hang around this zone for a few more days, attempt at maybe 100-point kind of a rally, it's possible. These things are, markets don't stand in one place. They go up and down all the time. So those things can happen. But I think most people who are watching the screen and reading the news flow around us should be resigning themselves to the fact that the market is now adjusting to a lower level, something it should have done probably a whole lot earlier, but was not doing because of the support of FII flows. But with the growing realization that given the currency and the India news flow, that support may not be there to the extent it has been in place for the last couple of years, and therefore people are realigning their expectations.
In that context, then what is the next trigger in your mind that could change this bearish stance on the market? Is it something from the government? Is it something external, global maybe? How does one really expect to put an end to this bearish stance?
It will not much that we wish these things had overnight solutions, Sonia. I'm afraid this time around there is no overnight solution. That doesn't mean that there cannot be things done which will repair the damage in the medium term, and all of us hope that the powers that be who can affect these changes, whether it's the government of India, the finance ministry, Reserve Bank to a limited extent, if they can do things which can start the process of the repair, then it's good, and the markets might take some note of that. However, the problem or the hole that we have got into does not have an overnight solution. So there cannot be one announcement which changes all the problems or takes them away, and suddenly we start moving higher. I think we'll have to do time, and I guess the notion of how much time we need to do out here is getting extended with every passing week, and people are saying now the recovery will take longer and therefore we'll suffer for longer, and that I think psychologically is affecting the market, and you can see it in the way the drift down is continuing, the decimation that's happened to a large universe of stocks, and now the fact that it's trickling down to the stronger segments of the market as well. So I don't think something will change overnight. Now you've got to ask yourself, in the light of the correction that's happened in the real large caps, whether these stocks can correct to much more meaningful levels, which means that to give you the example of the ultimate blue chip HDFC Bank, it's corrected to 600. The 52-week low is 500 rupees and change on HDFC Bank. Can HDFC Bank really go down to 500 rupees in this correction? So, I mean, those are the kind of questions you need to ask. Can HDFC go down to its low of 630? Can L&T break down from here and go to 650 kind of levels? Sudarshan was talking about 1500 on TCS earlier. Is that a reality? Could it be possible? So, you know, those are the kind of scenarios that you want to work with to see where the Nifty can go down to in this fall if indeed the breakdown has happened. Is that 5200? Is it 5000? Is it 4700? I don't know. But to cling on to 5500 beyond a few days, I think right now is going to be quite optimistic.
Do you also fear that a lot of FIs might start to lose patience now? I mean, we saw some signs of that yesterday where a lot of these bluest of blue chip names started to come off. But if there is no great progress, or of course initiatives will take time to bear fruit from the government, but if the monsoon session of the parliament does not pan out as expected, if there's nothing concrete that comes out, do you think FIs might just sort of put their hands up and say, okay, goodbye?
Well, that's a clear and present danger. I don't think everybody will exit en masse. That is not possible in India. So, you know, it's the typical conundrum. You know, you're running $2 billion and you know if you sell $100 million or $200 million, that $2 billion will become 1.6. So how do you sell a market down where a small amount of selling will disproportionately get your NAV down? So it's a bit of a trapped kind of feeling for many FIIs. But to your question on whether they should be losing patience, I would have lost my patience by now, because 6 years no FII has made money. Long-term FIIs have actually lost a lot of money over the last 6 years, whichever portfolio they're holding, just by sheer fact of where the rupee has moved versus the dollar. Forget the pain on what has happened with individual stocks. So no, 6 years is not short-term investing, you know. And what is there to say that this does not carry on for a couple of years more, which would make it 8 years on the trot of having made no money from a market. So, you know, everybody likes to talk about this long-term story, and for now, because of the shallowness of the market and the fact that 1 year down the line or 10 months down the line, we've got an important event which potentially could turn sentiment around with the elections, that people might just choose to hold out till May next year and see which way the wind is blowing. And if that scenario does not present a solution, then I think you'll see a pretty large exodus of money from the Indian market from the global guys. So, you know, the mood cannot be great, but technically it's very difficult to sell India down. And even a little bit of selling, you know, we have not seen any FI selling of any worth over the last 10 days. And look at what has happened with these stock prices. Lever's down 16%, L&T's down 14%, ITC's down 14%, HDFC and HDFC Bank are down 12-13%. This with virtually no FII selling over the last 10 days in net terms. So what will happen if they pull out a couple of $1 billion from these names which they own most heavily?
Also, you know, Ujin, someone was making the point about this earlier when people talk about depressed valuations. Someone was stating that the Sensex is still at about 14-15 times 1 year forward. So that is in line with historic averages. So it's by no means cheap at a time when the rupee is sitting at an all-time low, when macros are just, you know, debilitating day after day. So even in the valuation argument, things really don't cut it out for us.
No, and you should not be looking at averages, Sonia, when you're looking at valuations, because nobody buys the Sensex as a basket, barring a few ETFs or whoever is trading. People buy stocks. So there is a cheap part to that market, cheap within quotes, which are stocks which are trading at 8-10 P multiples. I mean, you can talk about any of the cyclicals. But hand on heart, who wants to buy Tata Steel and State Bank of India right now, or even L&T for that matter, or BHEL? Those are very cheap, but does anybody want to own them? So then you come to the stocks which people want to buy. And come on, is India cheap for the desirable basket? Lever at 40 times, ITC at 32 times, TCS at 20-21 PE. I mean, and Sun Pharma trading at 30 plus P or around 30 PE. So the good quality stocks in India are probably trading at their historically highest multiples. Forget this 14 PE average. And therefore you cannot bring yourself to say that the market is so cheap. HDFC Bank at 3 times price to book must be one of the most expensive bank stocks in the world, not just Asia. So where is the question of valuations having come down to very cheap levels? Because FIIs are looking, the FII universe for India is 20 stocks today. It's not even 50 stocks. Within that 20 stocks, I would say the average P multiple is probably 23-24 PE, not less than that. That is not cheap by any stretch of imagination or historical standard. There is a cheap part to the market, 30 stocks in the Nifty, but no FII even wants to hear the spelling of those names. Forget about putting in a buy order there.
In fact, in pre-opening today, it is quite a worrisome trend that you're seeing. All of these good quality names actually at the top of the losers list. Lupin, Sun Pharma, TCS, HCL Tech, Infosys, Reliance Industries. So maybe there is a trend that's emerging where FIIs might move out of these names. Sudarshan Sukhani is with us to talk about that.